Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Alyssa Zagrobski, Director of Retirement Plan Services at Shelton Capital Management, and as well as Carrie Freeburg, Senior Vice President of Product and Marketing at SILAC Insurance Company. We're here to discuss the evolution of employee retirement solutions and selecting the best product. It is great to have the both of you with us. Let's start quickly, Carrie, with you. Tell us about your role and the work that you're doing at SILAC.
Yeah, absolutely. First of all, thank you for having us on today. I head up product and marketing at SILAC Insurance Company, where we are focused on really indexed annuities. We're focused on safe accumulation so that people can help grow their nest egg for retirement, and then also accessing that in a way where they can have a predictable, guaranteed income over their lifetime.
All right, and Alyssa, I'll ask you the same, the work that you're doing at Shelton.
Shelton is an asset manager. We're based in Denver, Colorado, and I'm the opposite of Carrie in the fact that I run our 401k practice. So I'm really focused on the accumulation phase and working with small businesses to help them and their employees save for retirement.
So let's talk about that and make the distinction between these two different phases. Alyssa, when you talk about accumulation, what does that mean? What are you helping clients with?
So when you think about an employee that's working for an organization, if they have the benefit of working for a company that offers a retirement plan, they can put money into an account, either pre-taxed or post-tax, and that money is going to grow tax deferred until they hit retirement age. And at that point, then they can think about how they're going to take that money out and how they're going to use that money in their retirement. And retirement's very similar to a construction project. It always lasts longer and costs more than they're going to anticipate. So really being thoughtful about how much money you put in, being thoughtful about your employer being able to contribute that can really help you get to that through that accumulation phase.
And so that, Carrie, you're working with clients on the destination and decumulation phase of retirement.
Sure. I mean, there is an aspect of accumulating with us as well, but it's kind of after Alyssa's phase where people are saying, okay, I want to take a little bit less risk. I want to have principal protection. If the market goes down 10, 20%, I don't have time to ride that down. Can I have some protection and only, grow with a portion of the index gains? That's kind of where we specialize. But yeah, I mean, Alyssa, your comments about there's all of this effort on how to help people accumulate. The retirement world spends so much time, and you can grow your money this way and that way and there's like 9 million different options out there. And then we really have made it very, very simple. And I don't mean that in a positive way. We've oversimplified accessing it, and we just say, take out 4%, take out 3%. It needs to be much more curated solutions and how to access those funds in a way that you can depend on that income for the rest of your life, whether your retirement is long or shorter, but you need to be able to have a predictable income stream so that you can maintain a good standard of living during retirement.
And that's a great point that the both of you make when you think about how the retirement picture looks today versus even 10, 20 years ago, where we're thinking about people are living longer, right? Women are in positions of, accumulating money in their own rights. That's a whole other area of planning. But it seems as if retirement has really evolved over the past 10 to 20 years. And I think that's on the positive side in terms of the industry educating and understanding that it looks very different than just having a standardized set of actualized numbers.
Absolutely. I mean, there is something that was nice back in the day about having that pension, and you really had this guaranteed income that you could 100% plan around. However, you want to curate that retirement to what your needs are. Maybe early in retirement, you want to be able to travel. So you actually want to have more income for a period of time. And then maybe you don't need quite as much income a little bit later as life's a little bit simpler potentially. There's other people that might be working part-time when they start in retirement. They don't need as much income. It needs to be a little bit more fluid and where it can move and be flexible with your needs and as your needs change as well.
Right. So Alyssa, essentially the retirement responsibilities shifting from the employer as pensions for the most part have been phased out, and it's really incumbent on the employee themselves.
Yes, absolutely. I think retirement's always been thought of as a three-legged stool. You had your pension, which you counted on from your employer. You had Social Security, and then you had your own personal savings. And I really like how Carrie's using the term curate, because now there's more importance focusing on curating your own retirement, because there's not going to be a guarantee. There's not going to be a Social Security guarantee. There's not going to be a pension guarantee. So you really do need to curate your own retirement.
So if Social Security is not necessarily a guarantee, or the amount is not necessarily a guarantee. It's noted here that you're seeing increased government participation in retirement solutions. What do you mean by that?
So what we're seeing is the passing of the Secure Act. And in the Secure Act, there's about 20 states that have enacted legislation to require states that have small businesses to offer a retirement plan for their employees. So small businesses under 100 employees are required to offer some sort of retirement planning. So I'll speak for California because that's where I'm located. So we have a mandate that went into effect a few years ago. And if you didn't have a retirement plan set up for your employees, you could opt into the state option, which was an IRA option. And if you didn't do that, the state was going to penalize you per employee that was not in a retirement plan. So the government's really saying we can't rely on individual Americans to take ownership of their retirement. So we're going to offer something that's incentivizing small employers and small business owners to offer something for their employees so that they can have a secure retirement.
Yeah. And Carrie, that's something that makes sense in a way, because when you think about analysis paralysis, and just because you should be responsible for your retirement doesn't necessarily mean you're an expert in it. I'm certainly not an expert in the medical field, right? So how do you think about it when it comes to all the different options and companies and different funds that you could be invested in? How are you communicating this?
Oh my goodness, it's so overwhelming. I don't know how I will navigate all of that when I get there. So what I would say to that, Jill, is thank goodness we don't have to on our own. There's actually, in my world, we work with insurance agents, and these agents are actually experts in safe retirement planning, and they are the ones that have to navigate the universe of investment options that are out there, and they are experts in the space that can help curate that retirement to your personal needs. So that's where I'd say it's really hard to do it on your own, but thank goodness we all don't have to. And there are experts out there that specialize in different segments of retirement planning. And we absolutely need to make sure that people know that and know how to access those experts so that they have the income protections that they need in retirement.
And Alyssa, I'm going to ask the same question of you as well to wrap here. How do you zero in on what works best for you individually?
So many options out there. Analysis paralysis, you said it best, Jill. But I think it's being honest about your business and recognizing that there are a lot of resources out there. So there are firms that you can chat with about your own needs. There's the government option. So an IRA might work for you, but it's really about having that conversation and recognizing that there are resources, doing a little bit of research, and then asking the right questions. And there's a lot of availability of information out there to help you kind of pinpoint what the best solution is for you and your employees.
All right. And we appreciate the both of you sharing that with us. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.